Downsizers, right now, there is one form that could cut your property tax bill by thousands of dollars every single year. And according to AARP, more than 9 in 10 senior homeowners have never filed for it. I'm Weldon Hobbs, and I work with downsizers to align life and wealth goals with your home decisions. And during this life transition, every dollar counts. And the number of people that I talk to who are overpaying for property taxes without knowing it, it is staggering. In AARP Foundation, their research foundation, they actually found that more than 9 million Americans likely qualify for some form of property tax relief, but only about 8% of them actually apply. And the most common reason why people miss this is that they simply forget. And then they assume that the county assessor is going to tell them about it. They're not. They're not motivated to do that. That doesn't mean they're bad. It also doesn't mean that maybe they tried. And at the end of the day, you just never got the message. Either way, you are the one that's going to have to make it happen. You have to drive it. And here's what we're going to cover. We're going to talk about the types of senior property tax relief programs that may be available, how these programs actually work, why millions of eligible people, why they never actually go through the application, and then the mistakes that quietly kill the application and then your motivation throughout that. And then the part that almost nobody sees, that's the retroactive angle, where some programs actually may let you go back in time and claim years that you've already overpaid. That last one, that is where the real money can hide. And if you're already sitting there thinking that your state or county probably doesn't have any of this, don't go anywhere, because I'm going to show you a move at the end that works no matter what, no matter where you live. But first, let me show you how much money we're actually talking about. And if you like this type of life, wealth, and real estate content that applies directly to you, hit that like and subscribe button and let's dive in. So I had a client, we'll call her Carol. She's 68. She spent 26 years in the public as a public school teacher in the state of Illinois. And she had bought a home back in 2001 for 162,000, and then fast forward to 2024, it was worth 310,000. And her annual property tax bill, it was $7,400. That's staggering. So Carol, she paid that bill every single year on time without complaint. And she did it for over 2 decades. Then in 2024, a neighbor actually mentioned to her a senior freeze assessment, or a senior assessment freeze, excuse me. And it stopped her in her tracks. She said, "Do what?" Carol had never heard of it. So she went to the county assessor's office and to their website, and she actually found out that there was a program that she could apply for, but she had likely missed out on the benefits for years. Folks, Carol is not alone. AARP Foundation, they run an entire program specifically to help eligible homeowners and apply for property tax relief. That tells you how many people are in Carol's exact spot. So let's break down what's actually out there. And we're going to start with point number one, the relief program names, the nomenclature. Those are different depending on where you're at. So this might be called a senior homestead exemption, a senior property tax exemption, a senior assessment freeze, or something completely different. The name changes by state, by county, and so does the mechanism underneath it. Some programs reduce the assessed value of your home before the tax is actually calculated. So if your home is assessed at 300,000 and your program exempts the first 50,000 of that, you may only be taxed at 250,000. That's life, wealth, and real estate all sitting in one decision right there. The life goal is to increase your quality of life. The wealth optimization is to go look at the budget and where we can reduce costs. And in this case, the tax is the wealth drain. And the real estate, your home, that's the asset here. So I want you to notice something. I talk to folks downsizing every day, and downsizing does not mean moving. When I say downsize, I mean downsize the complexities in front of you. Downsize the budget if you need to. Plan purposefully so you can enjoy this next phase of life. Point number two, some programs freeze the value instead of reducing it. Instead of reducing the assessed value, some states offer an assessment freeze, and that's where they may freeze the value used to calculate your property taxes. And of course, that's subject to the program's rules, but there's something important here that we need to highlight, and it's the exact kind of detail that people miss. Freezing your assessed value, that does not mean freezing your actual tax bill. Tax rates and the other factors, those can still move, right? So if you go to your city or your county, whatever it is, and the tax rates move up, well, then you're going to be taxed. That what you're taxed on might stay the same, but you're taxed at a higher rate. And so therefore your bill, it may fluctuate, right? That's what we're talking about here. The amount you actually save, that depends on your program, your property, and where you live. That's the point of this one. On to point number 3, which is the savings that you can actually realize. That's going to vary from state to state. So the differences across the country, they can be significant when you start to drill down into it. So for instance, in New Jersey, eligible homeowners, they may receive reimbursements through the Senior Freeze program, and that's depending on their circumstances. In Texas, though, recent changes increased the school district homestead exemptions, and that's available to homeowners, including additional relief for those 65 and older. You have in Illinois, qualifying seniors may be able to freeze the equalized assessed value used to calculate their taxes. And of course, that's subject to eligibility too. You have to go through that process. But the point is, these programs can potentially save eligible homeowners real money. The amount, of course, is going to vary based on where you live, your income, the value of your property, the specific program you're applying for. There's no one number that I can promise you. What I can promise you, though, is that not looking for this, not inquiring with the county assessor, you're leaving the most expensive option on the table. Okay, point number 4. So some places allow late or retroactive claims. And here's the detail that almost nobody talks about. Those savings assume that you know the program exists and that you apply correctly. In some places, late or retroactive applications actually may be available under specific circumstances. Those rules, they vary significantly. They don't apply everywhere, but it's up to you to go check and make sure. If you believe that you qualified in prior years and never applied, like Carol, check directly with your state or your local property tax authority to find out whether you have any options at all. This is a piece that can turn one form into several years of recovered money. It's absolutely worth the phone call. And here's a promise before we go further. Watch each of these next steps because they build. The last 2 are moves worth investigating. They're going to save the most time and money, and we're about to get there. All right, point 5, deadlines. These are the first things that trip people up. Once you know about the program, you seek to apply, there's sometimes a third hurdle. It's a missed deadline. And that deadline, it varies by state, by county, by program. Some fall early in the year, some come later. They can change, heaven forbid, right? So it can delay things by up to a year if you miss the cutoff. You showed up right after it. So don't assume that you've got until the end of the year. Go directly to your local property's tax authority, the official government website, find the current deadline for the specific program that you want. If you miss it, and depending on the program, you could delay your eligibility, or you might have to wait until the next application window entirely. Point number 6, this is filing for the wrong program. Many counties and states, they run multiple relief programs side by side, and it's hard to discern which one you might qualify for. A senior homestead exemption, that's going to be different than a senior assessment freeze, which that can be different from a circuit breaker credit, which may be different from the standard homestead exemption available to homeowners regardless of age. They can all coexist at once with different rules, different deadlines, and different forms. Sounds like a pretty standard government operation if you ask me. But before you fill anything out, make sure you know exactly which program you're applying for. Filing the wrong application, that's going to delay or block the benefit depending on your local rules and just leave you frustrated. Point number 7 is that income limits change. So what actually allows you to qualify for these programs? And they change year to year. And so don't rely on outdated information, an outdated website. What you don't want to is be anticipating that qualifying for the program and then all of a sudden getting told no because you didn't have reliable information or somebody said, "Hey, I found this number." My suggestion here is just call. Make the phone call. Don't make it a guess. That way you know exactly what you're doing. Okay, point number 8. Missing documentation, that quietly kills applications because the motivation gets lost. And I'm going to explain what I mean here with an example I think we can all relate to. If you think about your DMV, Department of Motor Vehicle experiences over time, you get there, you wait in line, you get called up, and finally you're talking to someone. But then you find out that you're missing a piece of documentation. I know that feeling all too well because it makes my blood boil just thinking about it, but I know you do too. It's not a pleasant experience. You had dedicated time to go do all that. Well, this process, it's not much different, unfortunately. Depending on the program, you may need proof of age, proof of ownership, proof of residency, proof of income, 5 different bills. I'm being exaggerating there a little bit. But if they require certain documentation and it's missing, your application could be delayed or denied. You have to show up a different day. It's just frustrating. So don't just find the form and start filling it out. First, read the application, the instructions, find out exactly what's required, and then gather everything before you submit. And make sure that you're using the current form for the correct program because the rules, they are different depending on where you live. My advice, be the squeaky wheel, call the county assessor, get the direct guidance from them. Point number 9, these programs, they are old, but the biggest problem with them is that they don't go out and find you. So some have existed for decades. It's communication from the county level or higher, then actually taking action to complete the application. There's multiple steps in this. So that county assessor or another local office, they may administer it. And the burden of finding the right program, though, understanding eligibility, filling out the right application, the deadline, that may fall entirely on you. And so, yes, do what I said in the previous one, call the county assessor, but also know that AARP, American Association of Retired Persons, the foundation, they built an entire volunteer program to help with exactly this. And since 2019 alone, that effort has actually helped Americans obtain more than $10 million. And that's from one volunteer program. And that tells you how big this gap really is. I'll put the link in the description below so you have it as a resource. Point number 10, what if you find out that there's no program in your state or county? You are still not stuck. There's still another stone that you need to go turn over. And this is the part that I promised you. So everything I've covered so far assumed that you had one of these programs. And what if you go do the research and find out nothing fits you, you don't qualify for it? Well, all is not lost and not even close. This is the move that works no matter where you live, and it only amplifies the senior property tax programs if they exist where you are, okay? So separate from any exemption, any freeze, every county or most counties, I don't know of one that doesn't, but it's probably out there. They allow you the opportunity to appeal your assessment, to argue that value that they put on your home. And then if it's too high, what do? You should actually be checking this every time that the assessment comes out. And even if you qualify for that freeze, even if you got the exemption, if you have an assessed value and it's wrong, you're overpaying on top of overpaying. And here's how it works. So the county sets your value using a mass system, algorithms valuing thousands of homes at once. So they don't see what makes your specific home worth less, perhaps. Your job is to show them the recent sales of similar homes nearby that's actually sold, real data. And when they sell for less than your assessed value, that's actually in your favor. The good news here is that you usually don't have to pay for a formal appraisal to do it. You can, but you usually don't have to. So a real estate professional, they can pull what's called a comparative market analysis, a CMA, and using actual closed sales from the MLS. And that carries real weight with the board or with the assessor, whatever their appeal process is. And most agents, they're going to do that for you for little or no cost. A paid appraisal, that is another way to do it, $300 to $600. That's an option for high value or complicated property. But most homeowners, they win these appeals without going that route. So one warning though, do not pull from Zillow or Redfin. That they're not going to accept that most likely. They want real closed sales prices. And in some places, whoever prepared your CMA or appraisal, they may need to be available to answer questions. So it helps to have a professional actually standing behind the number. And this is the exact kind of moment where you don't need a big team. You need the right team, being the director of your life, the project manager of your life, and finding the right person to help you with this. If it ever gets contested, you had the rationale, you have a defensible approach, you had a system in place, and that was all because of you. So here's what I want you to do. Go to the county website, see what programs you actually qualify for. If you can't find them, then call them. See, make sure you didn't overlook it. File for what you qualify for because now that just means more money in your pocket. You are taking action to maintain or increase your quality of life at some level. Don't give more money away than you have to. If you have a big transition coming up and you think you might need some help, check out the resources in the caption below. We're putting on new content every week to help you in this journey. I'm Weldon Hobbs, and when we're making big decisions, we start with your life goal, we optimize it for wealth, and then we focus on the real estate. Remember, good decisions start with good information, and I'll see you in the next one.